So, the Argentine peso was in an absolute freefall. The markets were spiraling out of control. And then, just like that, everything changed. In a pretty shocking turnaround, the currency suddenly rebounded. So what on earth happened? Well, this is the story of a dramatic financial rescue mission and a really unusual intervention from a place basically nobody expected. And this was the moment that, as one analyst put it, caught everyone a little bit by surprise. And, for good reason. The rescue wasn't coming from a typical source. It was a rare, direct, and a truly extraordinary step taken by the United States Treasury itself. So what did the US just do? How exactly do you step in and stop a currency from collapsing in this massive global market? It turns out it's a high-stakes financial maneuver with two very specific parts. So let's get into the mechanics.
All right, so the core of the plan that sent shockwaves through the markets is this huge $20 billion two-pronged approach. Here's how it's all designed to work. The strategy has two main steps. First, you've got this $20 billion currency swap line, and we'll get to what that means in just a sec. But the second step, that's the real stunner. The US Treasury announced it would directly buy Argentine pesos. Now that is a move you almost never see, and has sent a really powerful signal to traders everywhere.
So what is a currency swap line? Okay, think of it like a financial safety net. It's basically a temporary deal that lets Argentina's central bank exchange its pesos for US dollars. This gives them a crucial supply of dollars, or liquidity, which helps stabilize the whole financial system and just calms down jittery investors. It's a huge confidence booster.
But this brings us to the multi-trillion-dollar question. Is it actually going to work? History shows that trying to influence these massive currency markets is an enormous challenge, and let's just say the track record is pretty mixed.
To really wrap your head around the sheer scale of this challenge, just look at this number, $9 trillion. That is how much currency is traded around the globe every single day. The market is just this colossal, powerful force, and trying to move it is no easy task. And this quote just illustrates the problem perfectly. As one expert put it, trying to influence a market this big is like throwing pennies into the ocean. Even for a country as powerful as the United States, the amount of money you can bring to the fight is tiny in comparison. So the crucial point here is, you're not just fighting with money, you're fighting to change the entire market's belief about where our currency is headed. Now, this isn't completely uncharted territory, but it is very rarely traveled. A direct, unilateral intervention like this by the US is just incredibly rare. So let's take a look at the last few times this has actually happened. If you look back, in recent history, the US has only really done this 3 times. In '98 and 2000, it bought yen and euros to try and strengthen them. In 2011, it sold yen after that devastating earthquake to stabilize their economy. But here's the kicker. The key difference, all of those interventions were done together, in concert with other major G7 nations. This move for Argentina, this is the US going it alone.
And this history really lays out two very different paths this could all go down. On one hand, you have the successful stabilization of Mexico back in 1994. The US didn't buy pesos, but it guaranteed Mexican debt, which totally calmed the markets and stopped a crisis. And Mexico paid all the money back. On the other hand, you have Japan in the 90s, which intervened on its own constantly. It worked for a bit, but eventually the sheer size of the market just made it an almost impossible, unsustainable battle. So, which path is Argentina on? Which brings us right back to today. Why this dramatic move, right now? What's the immediate goal of this high-stakes financial play?
Well, it all comes down to a date, October 26th. The primary goal here is to create a window of stability, to stop the bleeding and calm the markets at least until Argentina's crucial midterm elections. This is a financial move with a very, very clear political timeline. And all this leaves us with the ultimate question. After taking this really extraordinary step, is the US in for a penny, in for a pound? Committing to an intervention is one thing. Sustaining it against the tide of a $9 trillion a day market is something else entirely. The initial shock seems to have worked, but the real test of whether this gamble pays off has only just begun.